Hey everyone, Dave Ganderos here. Welcome to my YouTube channel. As you can see, I'm still struggling with the lighting on my camera. I'm going to work through those issues, but the most important thing is me getting some information out to you guys. Alright, so I noticed you guys really like the technical analysis, so I'm going to follow up with the three coins that we talked about and show you some patterns that are on the charts right now and how you should be looking to play the breakouts. All right, so before we get started, just please look to subscribe to my channel. Please like and share the video. It helps with the YouTube algorithm. I really appreciate any comments you have, and I look forward to sharing additional technical analysis with you. I'm going to continue to show you my results on my deposit into this opportunity. I'm waiting for another deposit to kick in, and maybe later today or tomorrow I'll put out another video about that. In the meantime, let's get straight to the charts. So you can see these are the three coins: Cardano, Bitcoin, and Ethereum. So let's start with Cardano. Let me move this. I'm going to actually move this out of the way. I don't really need to see you guys don't need to see me during the charting. So let's broaden this up. Now, as you can see, when I talked earlier today, what you do is you want to draw trend lines, and or you can use, like, if you don't want to use trend lines, you could use this tool that I mentioned, and then select the triangle and then pick your points. Pick your points for the swing low to swing high, and then the next swing low, and then the next swing high, and then this will kind of give you the pattern that's being developed on your chart. And then what you can do is you can wait here. As you can see, this is basically equivalent to a trend line, right? And this is equivalent to a trend line. It's touching multiple candles. It's touching the wicks. And this one is crossing the body, so it was kind of like, it looked like it was going to break down, and it came back in. Right now we're at a point where it's going to make a decision on which way it's going to go. So I'm on the 1 hour chart. If you place this on this chart and you kind of watch, and when the breakout happens, you're going to want to look to see if there's additional volume happening, because that'll be like a confirmation that the breakout is true and not just a fake out. And you want to make sure that it's actually going to break out and not come back in. So you don't want to take any actions until after the breakout. And once it breaks out, that's up to you if you guys want to take a trade or not. But these are the kind of things that you should be setting up on your chart and just waiting for something to happen, rather than blindly buying it, thinking it's going to go up or going down. I mean, if it's a long-term buy and hold, your dollar cost averaging in, that's a different story. But in the meantime, if it's a trade, you should be looking to set up a pattern or a trend line, and you should be waiting for the price action to do something before you get in. Now, again, I think earlier today I showed you that if you take the fib from high to low, you'll also see that it bounced right off to 65. So as you can see, it went up, went down, bounced off to 65. Now it's headed way up. Now the typical target of a triangle is from the high to the where this touched high to this touch, the price action, the pivot, basically the length of the pivot up and down. So if you take that and you put it somewhere where the breakout happens, this is where it can go. Another rule of thumb also can be that the price action could easily go to this point up here, which will be resistance, because this was the last pivot high. So it could turn into a double top, or it could break through. So some people set their targets here to take profits. As I mentioned earlier, algorithms have targets up in here. And it's just a matter of what you feel comfortable doing. You got to decide, do you want to take some profits here? Do you want to take some more profits here? And then maybe allow it to go up to here for the triangle breakout? I guess actually, really what I think you're supposed to do, I'm not 100% sure on this. I got to double check. It might be something more like that. The peak to the bottom of the trend line. So if you take that and you put that over here, you're getting into the $1.70 something for the breakout. So again, I'll try to get this video out as fast as possible. You guys decide for yourself. I'm not a financial advisor. I'm not suggesting you buy or sell. This is just a chart pattern on the screen for educational purposes and showing and explaining possible strategies you might have if during a breakout. So again, you don't want to, you don't want to trade inside here. You want to wait for it to make a decision, either go up or go down. Now, the fact that we're in a bull run and things are, institutional money's coming in. I heard a rumor or heard an article saying that Grayscale is going to be adding Cardano to its trust. There's a lot of money being thrown at these cryptos, a lot of big money. So I think when you consider that, I would not be betting against it. I would be going with the trend. It's an uptrend, and I would be waiting, and I would be taking a higher probability trade on the upside rather than shorting. But that's just me. Again, you guys got to decide what's good for you. And so with that, let's move on to the next one. Let's move on to Bitcoin. So Bitcoin, I think earlier today I was showing you like a descending triangle, and that was before this kind of happened. So that broke that structure, and now it turned more into a descending wedge. And again, what you can do here, you can use these trend lines like I show here, or you could possibly even use the triangle tool. Because a wedge is just a different form of a triangle. So you can go to pivot high, pivot low, another pivot high, and another pivot low, and there you go. You got your wedge kind of drawn. And depending on if you're going to the bodies, the peaks, you're going to get different results. And if you draw it like this, it looks like it's either way. It's still it's still in. But like if you draw it to the wicks, it is actually still in the wedge formation. I had thought this broken out, but really you want to wait until it comes out of here. I mean, this is like the low risk approach, right? If you consider the wicks as opposed to the bodies, then if it passes the wicks, then it really truly is a breakout. And you just got to be consistent. If you do the bodies, do the bodies. If you do the wicks, do the wicks. You can see that this is like a kind of a descending wedge. So descending wedges and ascending wedges are just modified triangles. And they're based on two trend lines, a trend line on the top and a trend line on the bottom, and you kind of connect them to an apex, and usually somewhere in the 80 percentile range within this triangle or this wedge is where it breaks out. And so again, with that being said, what you would do is you would take your trend line tool and you would draw from the top to the bottom, and you would place this where the breakout happens. Or you can go the other route, like I mentioned earlier, and just assume that it's going to hit the peak. You can consider taking some profits here. You can consider letting some more ride here. And then if you, again, with the Fibonacci, if you back out a little bit, you might get a bigger picture on that. Like, for example, if you draw from the swing low to the swing high, you can see again that it touched the 50% retracement. And, this is where you probably should have considered getting into a trade if that's what you wanted to do. And now what you're doing is, based on this Fibonacci retracement on the daily range, there's a target up here of where the algorithms are going to fight to get to. So maybe, for example, maybe you take 50% profit here, maybe you take 25% profit here, and then you let the other 25% possibly come up to here. And now along the way, what you're going to be doing is you're going to be entering somewhere over here. You're going to be setting your stop loss. I would say put the stop loss somewhere in this trend line so that, if it comes back down and it respects it, it's going to bounce off. But if it doesn't respect it, then you're going to get out and you're not going to lose a lot of money by turning around. So somewhere within this wedge is where you should be putting your stop loss. So if you're getting in somewhere over here, then you want to put your stop loss somewhere below this line, depending on what you get in at. So if you get in, you know, depending on time and stuff, so for example, you get in here, somewhere, then you're going to come down here and you're going to want to put maybe at the 382 level, you know, it's still within this box, but down here you're going to have to put it a little lower because there's a chance it could still come down and check and then go up. So you got to do risk management, and that's a whole nother topic. That's another video. But again, this is another pattern that's forming right now that you guys should be aware of and watching on your charts. Once you draw it on the higher time frame, you could drop back down to a lower time frame to see what's going on in more resolution, you know. So like down here, you could see that, you know, we're still here. We haven't broken out yet. I actually thought the breakout happened already, but in drawing these over with you real time, it's actually better for you guys, because if you repeat what I'm doing here, you guys can be setting yourself up for a decision to decide if it's right for you to take a trade or not. Okay, so again, I'm not suggesting you take a trade. I'm just showing you the patterns that are showing up on these charts. I'm showing you how you can use Fibonacci to kind of reinforce the fact that maybe it did bounce, maybe this is the low, and now we're moving back up. And you know, confirmation of that will be when it breaks here. Now a bigger confirmation when it breaks these midterm pivots, you know, you're going to start putting in. So right now is a high, low, a high, a higher low, a lower high, and then a lower low. So we're currently in a short-term downtrend. Once this price action breaks above these two pivots, we're changing direction. We've broken it, so it's going to be a new high, and hopefully it's going to be a higher low, and then another higher high and a higher low. And then really when you break this level right here is when you could really, you know, see that the change in direction of the short-term price action. All right, so you know, in the larger term, you know, one of the users on YouTube actually mentioned something, and I didn't really consider that. For the long-term price action and price analysis, we really got to go back really far. Got to go back to 2011, you know, and really, well, I mean, at least here, you know, you got to consider this and really consider the bigger picture for the you know, the price targets and the retracements that are going to happen. So yeah, we have short-term, you know, 65, and people are talking 100K by the end of the year. There's a lot of institutional money coming in, so I truly think that we're still in the beginning stages of this run. But you know, you guys got to figure out for yourself what you're doing. I'm just showing you the patterns, the charts, and what could be. And so with that, you know, just consider using the trading view link that's in the description. Set yourself up. You could do a lot of this on the free charts, and if you really find yourself liking it and it's beneficial to you, then I strongly advise you to you know, upgrade, because you get more capabilities. You get to use more indicators. You can publish charts. You can I don't know on the free one if you could do alerts, but that'll allow you to set, like right now, since I have this on my chart, I can go ahead and draw another trend line, you know, approximately somewhere over here. And then with that, set an alarm crossing up. It's breaking out. So now it's going to, once per minute or whatever you want to set here, and then you create it. And then with that, there's a little clock that pops up right there. And now you have this set. So when this happens, when the breakout starts happening, you can come and take a look at the chart. Same thing goes for this one. Let me come back here. Same thing goes here. If you're interested in this breakout, you just add another trend line, you know, right, really pretty close to where the triangle is, and then you just right click, add trade alert once per minute, so it doesn't get crazy, because you're going to get emails and you can get an alert sent to you. So if you do it once per minute is more often, and you could do it once per bar. But sometimes I'm not paying attention, so I'd like to at least get alerted a couple times so I can, you know, finish up whatever I'm doing and get back to the charts. So now I got another trend line set up on this triangle pattern that I'll get an alert sent to me when the action happens. All right, so So right now we've gone over Cardano, we've gone over Bitcoin, and now it's time for Ethereum. So let me just kind of start fresh here. So I'll leave this because this is actually okay. But you know, either on the 4 hour or the 1 hour is where you could start drawing these patterns. I like to go a little bit of a higher time frame because it cleans it up and it makes it a little bit easier for me to draw them. Again, here I'm doing, actually this is breaking out. So this is something that's happening right now with Ethereum. But you can use trend lines or you can use the triangle. So let's go and use the triangle, and I'll show you how you do it either way. From here to here, like again, you got to decide if you're going to do wicks or you're going to do bodies. All right, so let's see, what's a good way to do this? Wait, let's do it again. Maybe it's more like this, to this, to this, to this. All right, so we're just there. It can be said that if you're using the wicks like this, that we're still just about breaking out. You know, if you pick, yeah, we're just about breaking out. So this is still good. Again, you could decide what you want to do here. Really, this probably should be like that. Yeah, so pick. Alright, so we're just breaking on now. So I'll try and get this video out as fast as possible, but again, you can use these trend lines as a way to set yourself up so that you don't have to sit in front of the charts all day. You know, you just kind of place them here, and maybe during this video you'll see how the alerts happen. 1 bar crossing up. Okay. You know what I'll do? I'll bring this in closer so that the alert goes off, and you can see how it works. Look, see? So that's annoying. Alright, so after that annoying thing, but that's basically what you can do to alert yourself that something's happening on a chart that you're waiting for. So again, you could just use straight trend lines, or you could decide to use the triangles. Maybe until you get used to drawing the triangles, maybe start with the trend lines and then do what I did after the trend lines are there. Try to get the triangle to kind of map to what your trend lines are showing. And with that, you know, there you are. You got 3 patterns waiting to happen. You got 3 trades that you can wait. Oh, one thing I also want to show you here, I almost forgot, is you can see again, just as before. You know, if you take the pivot low, somewhere around here to here. Actually, you really should go down to here. Yeah, so that's pivot low, that's pivot high. And now you can see, just like I think I mentioned yesterday, look how it bounced off the 0.5. So in addition to the triangle, the other confluence is that it bounced off an important fib line, and now it's marching its way back up. So again, you could do a couple things. You can set your target to the peak of this as target 1. You can wait, you know, this is a pretty well-known target of close to 2400. You can set that because that's, you know, an algorithm. So you can do a target here. You could do another target of the all-time high here. And you can do a target there. So maybe you take 50% at the peak of this one, maybe 25% here, and then you let the rest run for the algo target. So again, this is just the use of Fibonacci and triangles and chart patterns and setting up a trap and waiting for price action to fall into it, and then you taking the high probability trade once the breakout actually occurs and have been confirmed. So I'm going to try and get this out to you as quick as possible, and I look forward to having you. Please subscribe to my channel, click the like button, share it. Take a look at some of the other videos on my channel, because I have other ways of earning cash. And I'll put out another video probably later today or tomorrow. Take care. Or if there's something big on the charts, I'll make a special video. Also, put it in the comments if there's other coins that you want me to look at, kind of show you how to do this kind of stuff on another coin. And I'll try to put a video together for you guys for that. Take care, and I will see you guys soon. Have a great day.